One idea. So today I don't really need this bar again. Jesus, Lord, let me just okay, just right there. I think is perfect. So just one idea is Thursday, and I think it's always important to share what we do at Market Surveillance Alliance, so you see exactly what we're pinpointing and how I take risk and how you need to establish what do you do when it works, because a lot of what happens is you can use the option as your stop loss. A lot of traders in New York, they use it like that. It's I'm just gonna take $100. That's my stop loss. If it doesn't work, it doesn't work. The difference is when you trade options, that's the smart way to limit your risk. Other people like you take $45,000 because this actually happens in the U.S. and outside the U.S. People take $45,000 all in one trade, and they go to zero most of the time. So you see a lot of tracks on social media when people are showing those life-changing profits. But from time to time, if you look at, and I've been doing this statistically month to month, you get max 3 of those life-changing profits, and then everyone else is zero, and they don't say because it's very sad, right? Now, in order to avoid that, what you have to do, one of my suggestions is when you look at the trade options, be willing to lose. Not because I think you're a loser. I don't think that. You're not a loser. But you need to understand the game. Remember, somehow, statistically speaking, the whole thing is against you. So we're looking at these particular events where for example, in our case, our in-house proprietary technology for MSA, what it does is like tells you something is happening. And then I can review a few sites. I will show you my favorite free site for you to get quotes and see with your own eyes that that's happening. Okay, so that's very important for me. So let's jump. You already know who I am. You know I'm JR. I'm the editor and research analyst, head of research and analysis at Market Surveillance Alliance. You know that, so it's perfect. Now let me just move here, and I'm looking at the company VTRS. Now this company is not popping like LTA shame. Plug Power. We traded this week, and it was an intraday action for us. We took 50%. We still have a few contracts that I want to exit today on Plug. But lithium, we thought some of the members thought we were late. Sometimes some of these trades, yeah, even if you include losers, some trades you don't feel it. You don't have to feel it. There's a reason why we have an algorithm. Same like Facebook, Amazon, Google. Everyone is coming to a pattern system of identifying if you do 1, 2, then probability of 90% you will do 3 with 4. So that's what you have to do. So VRTS, that's the ticker symbol. What was the last time you heard about this whole thing? Honestly, I haven't heard this in like a while. So Viatris Investment Partners. I don't know what they're up to, but a look at FinViz just to a little bit of guidance into what potentially was on the table. So I'm looking at sort of like a multiple bottom, potential breakout of the bearish trend line. But I like is a VTRS. That's what it is, VTRS. I just want to have this easy to confuse. Viatris. And actually I was studying it before. Now, massive drop, and we have the base, right? This is the base. That's whole liquidity to the bottom. Perfect. Does it have something else? Oh, yeah, actually, it comes all the way back to previous liquidity. I'm doing this with you, everyone. So this is 2008. This is a great financial crisis. And that's where we are right now. So this is massive. This is a massive opportunity. If you look at the previous pattern, you have a 1-2 punch to the upside, 50% all the way to, say, from November to June. That's about 7 months, 8 months, so that's not bad, and that potential can be the same scenario here. So as far as buying the stock, it does kind of make sense if you're looking for that, but remember, up front, if you're looking to get 100 shares, then yeah, but you need some money, right? What I would suggest is take a look or look for a more exponential short-term return. That's what I'm suggesting. So this is what we have so far. Liquidity all the way back to the great financial crisis, 2008, 2009. There's where we are so far. And judging at the statistics, the book value is $16. They're selling for $9. So that's not a bad deal as well. The company has a lot of shares. That's almost 1 billion shares float. There's nothing to do with, well, institutional ownership, 75%. That's not bad. Probably guru focus. And I think the company is part of the S&P, well, yeah, it's part of the S&P 500. So that's what we have. Volume, 15 million shares. But here comes the kicker, where you cannot understand that someone knows something. Because out of the blue, looking at the options activity, and remember, one of my mantras is, do you really want to be a better US equity trader, equity investor? Well, you're owed to train and learn the ins and the out of the options market. You become better if you trade options. There's no questions. I guarantee you that. Everyone wants to do algorithm trading. No one wants to lift the finger. No. Learn the ins and outs of the options markets. Once you do that, I swear to God, you will be unstoppable. All right? Now, doesn't mean you have to go all in on weekly calls. Don't forget that. So, look at this. Out of the blue, yesterday, for whatever reason, there is a total volume of 11,441 contracts. Why? Why is that? Now, the open interest, when I will look to see that it's super positive and everything, I look to see these and these volume and that open interest together. I will check later during the day, but this is where I have my eyes. Now, sometimes I think these contracts that have no history, they guide you to see that there is appetite. Someone has appetite for risk on this one. So I'll be taking the trade. Contract high, not exciting, but also another thing that I like is the stock is trading at $9, right? And this idea is for 10. So that's close, sort of like in the money, but it's 9.72 and they're picking the strike $10, the 10 call strike. So I go for more into ATM, at the money, which is when you actually put in some money to play and you don't want to, you're kind of giving yourself room to maneuver in case things goes against you. Now, I also like the fact that it's in October, so it's going through the volatility or potential risk that the circus, the Federal Reserve, will open their mouth and say something that will just crash the stock. Volatility will just, implied volatility will just suck you and you will need a bigger move. So I like this structure, but definitely someone is playing the game. Now, if I look at the money, because let's say that was $45, 45 cents, $45 times 11,000 contracts. That's a little bit of money there. It looks to me that it's a little bit of money. Yeah, $45. That's kind of a little bit tricky here. So I'm going to play this one. Implied volatility 0.45, that's 45%. Not too crazy. The basic strategy will be to buy the call. Delta 44, so for every dollar, I think we move, potentially we move 44 cents plus the gamma. It's the speed and how the delta would change. But if we move a dollar, full dollar, we potentially may look to double our money. So I will be conservative in this particular trade. And if you get your contracts under 50, pay no more than 50, 55 cents. The lower, the better. Look to exit at 90 cents. That will be conservative. And potentially, for you to double your money in the next October 14, we're September 8 today, to look to double your money potentially in 45 days or 30 days. That's doable when you trade options. The structure present less risk because it goes through September. They're not in front of any particular big event. I think October they don't have Federal Reserve hike meetings, so that will give the time the market to recover massively into midterms, which is a little bit tricky. But I like the trade, I like the setup, I like where we are as far as the timeline with liquidity all the way back to the great financial crisis. I like our odds to potentially go back to retest highs back on March of this year, 2022, and then a continuation to $18. But definitely I'm looking to double my money. Again, make sure you execute, get your fill under between 50, 55 cents, lower the better, and look to exit to collect 100% if this work well. Please remember, past performance does not indicate future performance. At all time, your risk, your opportunity. When you win, you will take home the big bucks. Just remember what I explained at the beginning. If you're gonna go big, just remember, it's gotta be money that you are willing to let it go if it doesn't work. But remember, whatever happens here the potential upside is all yours. So it's yours to take at any given time as long as you accept the risk, okay? Guys, this is what I have for you today on my second video of the day. VTRS, pretty basic setup. We know there's something happening, and definitely, like I always repeat over and over again, someone always knows.